I think we've basically accomplished everything we said we would do 2 years ago, including acquisitions, divestments, raising capital, bringing in new investors. We have a new resource update that shows that, we're close to 2 million ounces. We could make it there if we want to. And we've got lots of new discovery. Plus, we got this new strategic property with the joint venture. I mean, it's the Eleanor is going to be sold over the summer by Newmont, and a new player is going to come in, and there's going to be a lot more attention and activity in that part of the world.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
Welcome. This is Financial Survival Network. I'm your host, Kerry Lutz. We are sitting down with Fury Gold Mine CEO Tim Clark and Chief Geologist Brian Atkinson. And I've been looking forward to this. Fury just released your updated resource estimate for Eau Claire and your maiden estimate for Percival. So Tim, could you start by explaining the significance of the increased resource estimates at Eau Claire? And I would also like to point out your conservative methodology behind these numbers.
Well, I mean, I'll start it out, but I'll let Brian run with it since he was the one who really accomplished this goal and his team. Effectively, though, we added 530,000 ounces to the resource that brings us from 1.3 up to 1.88 million ounces. That shows a pathway to 2 million ounces, which is sort of really the target that a lot of these companies are looking for theoretically. You don't have to get to 2 million. You just got to show that you've got a real resource that they're interested in buying. And I think what our goal here was to spend a couple of years getting this set up so that it's like fixing your house up ready to be sold. And the idea now is to really go out on the rest of the property and look for some new discovery on top of what we have at Percival. Percival was 225 or so thousand ounces, and no one really sort of saw it that much, and it's a real add. If we can find a couple more of those, it would be great. And there's 15 anomalies out on the property that look just like it. So just to pass it off to Brian, why don't you sort of elaborate a little bit more on the resource itself?
Yeah, definitely, Kerry. Yeah, we're pretty excited about it. The numbers came out, at the upper end of the threshold of where we were thinking. And, we managed to put a lot of those ounces into the measured and indicated category, which, is the higher confidence sort of level. Big increases there of, 36%. And then, the bulk of the 45% increase in the inferred ounces on the project came from Percival, which is sort of, like Tim just alluded to, the first time that's been put together into to resource. And there's not that much drilling. At the hinge we did just over 20,000 meters. Throughout the rest of the top deposit we did another 20,000 meters, and then the 7,800 meters that we did at Percival to add these ounces that we've added. We've also improved the geometry of the veining on the east end of the deposit, the Eau Claire deposit, where we had additional data. Through the main part of the deposit, we haven't put any drill holes in there, so we didn't adjust the veins that were previously modeled. But we went from a 35, 40 degree dip on the veins to a 50 to 65 degree dip on the veins. So much better geometry for any sort of eventual economic study that goes forward on this.
All right, and your methodology, we were talking pre-call, said you're beyond conservative in many respects. If you were really looking to push this thing, you could have gone a lot higher. We're looking at $1,900 gold, but it seems like where many others are over-promising and will eventually under-deliver, you're the opposite.
Yeah, look, there was a historic resource done on this that was unrealistic, and I think since then, it's battled a bit of that stigma, and now we're back up to that same resource number, and this is a very defensible resource number with half-gram open pit cutoffs. We used the 0.52 revenue factor pit at Eau Claire. So there's lots of room there, and like I said, all these ounces, went into the measured and indicated category. So nice systematic drilling and doing that. So there's not a big bunch of inferred where we're looking at wide spacings on these high grade veins. And like you said, $1,900 gold, nice reasonable cutoff levels, and great grades still coming out of it. Right, like the grades dipped a little bit, but that's largely because of the increase in the open pit and bringing in Percival as well.
Yeah, always better to be conservative and surprise on the upside. Tim, as far as Eleanor South, how does that fit into the equation based on the resource estimate?
Well, it doesn't fit into the resource itself. I think what it does do is it gives us a huge component for new discovery as we think about our project this summer. And the goal is to go up to the joint venture and do a big geochem study on the Eleanor anomaly that we have up there that sits on our side of the border from Eleanor. And we're going to get also some drill results back from the spring that we did in April that were up near the Sirios side that we're looking and trying to determine how far down that high grade comes on our property. And so once we get some of those numbers back, we'll be better able to assess it. I think where we are right now is, like I said earlier, we don't have to do a lot of drilling at the resource because we now have a real resource that's legit. It's got the numbers, it's got the backing, and we can focus on new discovery, which will include some of the stuff on our property at Eau Claire, but as well as the joint venture up north. And I think that's what a lot of people are asking. It's interesting. I'm getting some people asking me about the Sirio side, and then others are asking me about the Eleanor side. Everybody has their sort of favorite pick. It's 14,000 hectares. We're going to get to it. We just don't need to spend as much money this year because we've got our resource now. And one of the things that Brian said to me when we got our numbers back was this third-party vendor that we use to do the assessment, made a nice comment saying we don't typically see these kind of resources in Quebec. This is a big resource for Quebec, and it's high grade. And I've looked and done some comparison to some other companies that are much higher value than ours. And we have a higher grade, more ounces, and they might be up in the mountains and we're along power and roads. It's a huge difference. This is legit. Companies should be looking at us because we're not cut off in any direction, and we've got a lot more to do.
Speaking of which, Brian, so basically it's open in all directions, this resource. There's no constraints here, physical constraints.
Yeah, no, it's sort of amazing. Some of the last holes we put out last year, we had 3.5 meters of 17.6 grams, 3.5 meters of 32.6 grams. Those were in a new structure those are the only two holes into that. Our westernmost hole on the hinge is wide open. We brought in some ounces into the gap, but that's still wide open. And then on the east extension, again, it's it sounds cliche to say it's open in all directions, but legitimately our boundary holes are all open, and we haven't even assessed the further depth potential below where it's drilled below 650 meters below surface now. So there's lots of additional space here to keep expanding this.
Right. So for future drilling, so you kind of have to make some decisions, obviously, because there's so much potential in every direction. Where do you think the best potential is here, Brian?
I think what we're going to focus on is, finding some, a new discovery out there, looking at some of these anomalies that we have out between Percival and up to the north to Serendipity. And then also at the Eleanor target that we have on the Eleanor South project. So it's going to be more focused on that. The resource is open. We can go in there and drill some shallow holes in it, but that's an iterative process to show further growth and that. Whereas if we can go out and make another new discovery and add, sort of showcase, another Percival or something like that sitting out there, or lo and behold, we get lucky on the Eleanor anomaly. I think that's going to be our focus, is going out there and finding something new as we go forward here.
The other thing, Kerry, is we're going to spend $200,000 and go back up to Nunavut. We got a lot of interest from the producers last fall, looking at our asset up in Committee Bay. And so we've got to go back up and open up the camp anyway. So we're going to do a small survey project up there that I think, investors should take interest, because, for the last few years, there wasn't a lot of interest in taking big swings. But with gold price now, the bigger companies are starting to look again. And we're going to be prepared and ready to market that. That's a historical spend of a couple $100 million up there in work, and we get zero value for it in the stock. And it would take one CA agreement and an investment of $10 million to re-rate that thing pretty quickly up there. And then on this Eleanor property, we're going to spend quite a bit on a geochem project in May, and that's going to give us some real targets. And this anomaly is sort of the same signature and size that the Eleanor mine is built upon. So it could be a big swing there. And we're going to be working out of our regular camp. So we're going to have a helicopter to be able to go to a bunch of these sites. And Brian has a list of his highest priority targets, and we're going after the best ones.
Getting to finances, it always struck me that Fury's been kind of this raging value play where, you're holding shares in Dolly Varden Silver, and they've gone up, and, the enterprise value less your cash in the bank. I mean, you're trading at peanuts here.
Yeah. So, it is pretty amazing. And I've been trying to explain it to myself. I think a lot of it was because people assume that we're just this derivative of Dolly Varden and they're more liquid. The irony, and we're a huge fan of Dolly Varden. The irony is every 10 cents increase in their stock price, our value of their shares goes up by $5.4 million. We have 54 million shares. It's over $55 million right now. Our market cap's at 75 or 80. We got $5 million in the bank. We've got historical spending in the hundreds of millions of dollars on our property, and we're getting paid, $20 million in enterprise value. It's crazy. The crazier part is you look at like some of these companies, they're valued in hundreds of millions of dollars, and we have more ounces, better quality, and better access. And it's just the difference between the silver play and the gold play. But it's going to come around at some point. And I get a lot of questions about Dolly Varden. And, look, they're surrounded by Hecla, the natural buyer. They've got $25 million in the bank to spend this summer. We could see some activity, especially when silver is going up and gold's going up. We are going to get re-rated, and this is probably the best value play out there in the sector, and we're the best financed junior out there by far. And so there's not as much risk with us, and you've got a lot of potential swings with our multiple properties. Yeah, it's crazy.
And you got an updated resource that justifies a valuation in its own right.
I think we traded like $14 an ounce, and some of these other players are trading, I think, in the 20s, and some of them in the 100. I know the silver plays some of them are $150 an ounce on gold equivalent basis. It's a trade for them, but I think I've been in capital markets a long time, and eventually people discover these things, and when they do, it's pretty fun because they'll rip. And I think we're positioned for that.
Positioning is everything. And I remember somebody once said to me that he who waits gets everything, right?
Well, we're trying to be patient, and we're just doing a lot of good blocking and tackling. I think we've basically accomplished everything we said we would do 2 years ago. Including acquisitions, divestments, raising capital, bringing in new investors. We have a new resource update that shows that, we're close to 2 million ounces. We could make it there if we want to. And we've got lots of new discovery. Plus, we got this new strategic property with the joint venture. I mean, it's the Eleanor is going to be sold over the summer by Newmont, and a new player is going to come in, and there's going to be a lot more attention and activity in that part of the world. And it's a great part of the world, as investors pointed out to me when I was in New York yesterday, that it's one of the top 2 jurisdictions in the world to be mining because of the support of the government. You don't want to be in these emerging markets with this political scene right now. All of our assets are spread across Canada, and there's going to, in my opinion, there's going to be coming consolidation at these higher gold prices. And all our properties are big properties, and they sit next to all these majors with Hecla, Agnico, Newmont. And as I spoke to one of these big gold CEOs last December, I said, what do you do in an inflationary environment? And they said that the answer is easy. You consolidate and you buy more land. So you don't have to build 5 roads. You build one. You don't build 5 mills. You build one. And so my view is the junior space is up for consolidation, and we've got a lot of attractive things, including, a big slug of, dolly stock that can be monetized. So, it's a good play.
Right. And you're in the position where you don't have to dilute to raise capital when it becomes necessary.
Well, right now we got $5 million, and we've got some leftover flow, and we can pretty much do everything we need to do without raising any money right now.
Yeah, so that's an enviable position for a junior to be in. Many others are scurrying, trying to figure out how to negotiate this really complex landscape here. So, Brian, looking ahead here, when the drill's going to start turning?
Yeah, we're hoping, mid sort of June. Right now, we're in a sort of a time period that's called Goose Break in Quebec. So that stretches from April 20th to May 20th, and then we're hoping to mobilize and get going here by mid to late June. And targets are ready to go, plans in place, and we're going to focus on completing the biogeochemical grid over top the Eleanor target, so that we can have those drill targets ready, permitted, and ready to go, and hopefully drilling those in the late summer to early fall here.
All right, sounds great. Well, I appreciate you both coming on, gentlemen. Hey, the ticker symbol, of course, is Fury, both in the U.S. and Canada. The website is furygoldmines.com. Make sure you go there, sign up for notifications. I have a feeling they're going to be coming fast and furious. We'll talk to you again soon. Thanks, Tim. Thanks, Brian.
Thanks, Kerry.
Thanks, Kerry.
The Financial Survival Network.